Hello, sharpshooters. Well, a quick video. I have something to say. Can you imagine after 300 videos, I still have something to say? And I've been watching so many people coming into the business. Unbelievable. A lot of people, you know, they don't show their performance. Ask yourself that question. Why aren't they showing their performance? But they're teaching a lot, right? They're teaching you lots of things, but never show their performance. I show my performance up or down, and I try and help. I try and give back because I have 30 years of experience, and I worked 15 years in the City of London, and I've gone to school for 7 years. Now, I don't really believe in these self-taught people in trading. There might be some, but the self-taught ones usually end up pretty badly. Like Nick Leeson, remember him? He was self-taught. Changed everything in the city because after that, um, used to be you used to come from the trading back, the trading, not trading as we know it, but on the floor, etc., and work your way up. And that's what he was doing in Singapore. And he blew up a 200-year-old bank because he was able to circumvent all their. That's not happening anymore in London. They're basically hiring straight out of Columbia, Stanford, Harvard. So, I mean, there is some merit to going to these schools. I didn't get into Credit Suisse because of my good looks, although that could help. But yeah, most people can't get past the reception, and that's my phrase. A lot of people use it, but I was the first one to coin it. Okay, most people can't get past the reception. Credit Suisse is an amazing company. I worked there 9 years. Fantastic company. I worked at Deutsche Bank. I mean, these are very hard companies to get into. Anyway, I have knowledge that some people don't. Now, first of all, I'm going to show you again my amazing robot here, which I'm not really selling anymore. You know how they say, see on top here, it's optimizing. Okay, this is on a 15-minute chart. It's optimizing. This robot will optimize anything, but I use it on Euro. So it self-optimizes. I mean, I've set it on every hour because it's a 5-minute chart. So every hour, as the market changes, we will find some buy and sell points. I mean, there's hundreds and hundreds of lines of code. I originally, there's been 11 versions of it, and the MT5 version is for sale. And the MT5 version is quite good. It's a plug and play. It's only got my main module. It's not as complicated as my MT4 version, which most people couldn't understand. So, but I sold, went quite well for a long time. It's been since 2015, and it's so solid that you always want the latest tech. But in trading, I hate to tell you that the latest tech was invented in 1930. So a lot of people say, "Oh, look at this great theory." Well, it was invented in the 1930s. It's nothing new. It's just somebody from that was born in the year 2000 discovers it when he's 18. You know. So anyway, what I want to talk about today, before I lose track, is I've finally been vindicated because it seems to be on MT4 this amazing theory that to test a product you have to plonk down $10,000 or something, or a demo account or a set account, as many people do, and that's 10,000 set, which means $100 invested. Be careful with that. Be careful with that. And then you basically put one lump sum, and don't touch it. That's how good the product is. Well, there are various methods to trade. The lump sum method is one, and I don't like it at all. The other method is called the dollar cost averaging, DCA. Now that means you put a fixed amount every month, regardless of the market. It worked very well for the Dow Jones for me for 25 years. I put money every month, and whatever happened, the Dow Jones 26,000 or 5,000, it doesn't matter. You can do a little bit of timing. Nothing is ever completely easy in life. You have to do some work, okay? Those who think, you have to do no work, I've got it wrong. You got to work your butt off to become successful in anything, and trading is one of them. I do it full time, and that's the only way, really, over time. And you got to have time. You got to have time. You can't, you know, the person who goes from non-farm payroll number to this number, first of all, will have a breakdown and can't continue trading that way. It's not possible. That's why you need machines. And, the stress is too much. And it's just not a good way of investing. I mean, it's a very poor way of investing. You don't invest on, daily numbers. You invest for years. Look at Warren Buffett. He bought his first share of Coca-Cola when he was 16, and he still has it. Okay? Although he's got billions in Coca-Cola. And Warren Buffett doesn't go out and buy $5 billion of Goldman Sachs and put a tight stop on it. That's why I'm against stops too. But anyway, let's get back to the subject. The subject is, as you watch my robot optimize. I'll put it back again. There you go. As you watch my robot optimize, I will tell you so you have the lump sum method, which you put money in every month. And on the Dow Jones, let's say I did that for 25 years, and I averaged about 20%. There's been very few. Last year was a down year on the Dow Jones, first time in 8 years. So you can imagine that over time, you will always make money that way. And now you can apply that to signals. If you've got a good method like I have, my signals when they're down, put money down when it's down. You don't buy a stock when it's at the high. Okay? You don't buy a signal when it's at the high, and that's what most people do. They see, oh, it's made 26%, it's made 25%, it's made 100%, it's made this, so I'm going to buy now. Okay, you can do that, pick up momentum, but don't you think it's better buying it when the signal's down 60%? If it's had a great track record? I mean, last year I had a signal that went up 225%, and it's down 60% now because it's the beginning of the year, and I had some positions I took out myself, which the robot wasn't taking out. So I said, what the hell? I got a whole year to make it up, right? So this is the time to invest. But do you think one person would go in there at that time? No. They go in there when the thing's up, 25% a month, which is wrong. It's not the way of investing. So you can have this daily average sum investing. Let's say you have $10,000, you go to Fidelity in New York, and you meet Series 7 representative, which is an exam you have to take in New York, which I have, by the way. Nobody else has on MT4, I'm sure, to become a certified financial advisor, which means you can advise people. Okay? In America, you can't advise people unless you have this exam. So the Wolf of Wall Street, he gets all excited when he gets his exam. So he would say, well, you have $20,000 or whatever, or $200,000 or $1 million. I suggest you don't put it all right away in the fund. You put it in, when the fund goes down, I'll call you, whatever. That's what they would do. No lump sum investing. So why is everybody on MT4 judging signals by the lump sum you put in? That's completely wrong. And I've been trolled. I mean, you should see how I was poo-pooed on because I said this. Oh, you're cheating on this and that. You're trying to get your drawdown fixed, blah, blah, blah. I mean, they don't understand, that there are three ways of investing. So you have the lump sum investing, the average out every month, which is much simpler for most people to use. And you also have value investing. Now that's more complex. Value investing, VA strategy, and I've put an article on that because now it's in print. So it must be, what I've been saying Must be right, trolls, because somebody's written it down. Actually, this is a theory, okay? And it works. It works over time. I'm in no hurry. I can invest for 10 years. I'm worried about what I'm going to make in 10 years. I'm not worried about what I'm going to make tomorrow. Now, when you start thinking like that, you will become very rich. Now, you see now my robot has optimized, and it's found the basic optimizations here that it will use. So it's constantly adapting to the market and has a filter here, which basically says, don't take any trade until, don't take any long trades right now, which is probably what everybody's doing, by the way. I got the sentiment report today, and 71% of retail clients are going long the euro. What does that tell me? I don't want to go short because most retail people are wrong, and every company knows that. So basically, these 71% long, 71% long, they're going to have to do something about their position one day, and I'm taking the opposite position as brokers do. Okay, that's what I do, and I try and teach you that if you listen to my videos. Okay, now the third method, okay, is value investing. That's more allocating more money after periods of positive performance and less money after poor performance. Okay, that's another method. Now it gets a little bit more complicated, but I have put an article written by somebody who finally, it's called Adam Collins, I'll give him credit, who's finally put this in print, so it must be right, what I've been saying for the last 5-6 years, okay? Just to tell you the short story of my 25, I still put money in the Dow Jones, but all the money I saved for 25 years I had to give away on a divorce. Well, there you go. You see, women? Evil. Evil. Stay away. If you're a trader, don't have a... Just stay a lone wolf. Do like me. Go and live in the countryside of Normandy and get a lot of land and be happy with your dogs and life in general and nature. And trade. Eat, trade. Eat, trade, and sleep. Right? Okay, so I just urge you to read this article. I've got it's on my Twitter page. It's on my MT5 page too. And remember that I still have look at this chart here. See, this is a trade I've made. Look at this trade. Down, 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 down. It says buy here, but wasn't very long. You can still, basically you cover your short here, and then boom, again it's telling you to sell. So you sell, you sell, sell. Make a little trade, boom, buy a bit, and then today, it looks small on the chart here, but today was quite a good day because I had large positions. So there you go. This is the other part of my secret for my friends. This is my Renko offline chart. This is live. You can see this has got all messed up because this gives me the latest news. All I want is the last two things to look out for. This makes it clearer when you should go short. Pretty easy, right? Red, go short. I mean, all you have to do is look at it. And here, when you're below the 0 line, that's short. And this is very good. This is based on about 10 or 11 Renko ATR charts. So you can have different time frames because Renko doesn't have a time value, as you know, right? And these are some indicators I have a look at. But it's funny that some of these indicators show you great lines to trade on, but they don't really work in real life. That's why these guys don't put performance. Anyway, I've told you about enough. It's 15 minutes. I wish you luck, and thank you for watching my videos. Like it,